You're watching News 8.
CPA Matt Bryant is back with us. Matt, thanks for a few minutes.
Nice to be here.
All right, we are talking about life insurance this morning. Let's begin by defining what is life insurance.
It's an insurance policy that will pay a sum of money to somebody or some company when the named beneficiary, the person insured, dies.
All right, why are we talking about it? Why is this so important?
Well, it can provide money for your family and those you care about after you die. It can also help pay off debt and last expenses like a funeral.
For sure. All right, how does one go about getting some life insurance?
There are a number of brokers you can work with who will work with multiple companies, or you can go directly to a company who may be able to provide you a policy as well.
And how do you keep that policy in effect?
You need to make sure you pay your premiums on time. If premiums aren't paid, the policy may terminate, and then there would be no benefit if you were to die.
A question that everybody going down this road asks, how much life insurance should one have?
Well, the general rule is about 8 to 10 times your annual income. Another way to do it is to go through, calculate how many years you plan to work, what your mortgage balance and other debt is, and then subtract out your current savings and other life insurance will get you to what that gap you might need to cover.
A couple ways to go about this. What types of life insurance is available?
The most popular is term life insurance. That will be for a set period of time, normally 10 to 20 years. You pay a premium, and if you die during that time, the insurance will pay out. But if you live past that term, then it expires and you have to get another policy.
All right, so no premium once the policy expires. What about whole life insurance? This works a little differently.
Correct. Whole life insurance is going to cost more, but it has two advantages. One, it does not expire, so you can keep that until your death. And the second is it will create a cash value in an investment account, and you'll be able to draw against that later in the future. It costs more, but it has those two advantages.
All right, so term life and then whole life, how do we know which one is right for us?
That's a great question. A trusted certified public accountant can be a great resource for life insurance and future financial planning.
So we won't answer that question this morning for our viewers. They'll have to figure it out with their CPA. Matt, thank you. We appreciate it.
Thank you, Mark.
If you missed any of this, we'll share it online as well at rochesterfirst.com.